Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 13th of November. Starting off with the FTSE 100, which is resting on the top of that rising trend channel there from June, the black line, so 98.80, the normal level. Below that, we've got the risk of testing previous resistance towards 97.70. That's also the floor of that rising trend channel from the last month, shown in red. But at least while we're above the floor of that rising trend channel shown in red, we are looking for the top of the channel there as high as 10,150. And maybe that makes for an end of year target given the time of year we are experiencing at the moment. Moving on to the DAX, and here it's been a market which is rather slower than the Footsie to get off the ground after the recent dip, but we had a rebound above a rising 200-day line there. That's 23,420. We gapped up yesterday. We've held the gap. And above the broken resistance line there from last month, so 24,100. Looking at the highs, so towards 24,800. And for a year-end target up to the top of the channel there from April, 26,000. Worst on the downside would be the 200-day line, but not expecting us to go really on the wrong side of 24,000. We've got the RSI at 55, which is in a good place for further moves higher. The Dow is next, and here the picture is that of a market which has hit the top of that rising trend channel that we had from May last year. So it's been a long journey there, but looks as though we've got a new scenario to look at now. So yesterday, I think I drew the resistance line projection there, and that was from back in July. Current situation is that we're in a rising trend channel. Top of the channel, they're heading for 49,200, and we're looking for that by the end of this month at the current rate of progress. Not expecting anything lower now than 47,500, which is also the floor of that July channel. Recent technicals helped along by the RSI 50 plus rebound that we had at the turn of the week. So obviously the Dow looking pretty fine and dandy at the moment, and just a matter of trying to work out exactly where that line is. I could say it's as I've drawn, but in fact, the way it looks at the moment, we could have much more upside than just 49,000 plus. On to the cryptos, and here might be hoping that with risk on in the equities, we have risk on in the cryptos, but that's not the case. We've had to retest the floor of that rising trend channel from, well, at least the support line there at 100,000, which is disappointing. Current situation is that we've got recent resistance of 106. That's the initial target, but the main target here in the near term would be to try and get to the 50-day moving average at 111 and stay above recent support at 98,000. Moving on to Ethereum, and here it's been a rather soggy situation, but at least we can say that this market is holding above at and just below the 200-day moving average, so that's around the 3440 level. While we're above that, looking for the 50-day moving average at 3950 as a best case scenario target. I think we can take away that April uptrend line because it has been superseded by that line at that angle. So that line there towards 3300. So at least while we're above that, looking for the 50-day line, hopefully up to 3950. The big move, though, if we had one on the upside, would be breaking that July resistance line in the RSI window around the 46 level. That could then allow this market to pop up to 4,500, but we still obviously have the chance of a final dip down to the 3,000 area, as shown by that August support line. But on balance, we are hoping for the 50-day line first rather than testing that April support line. Gold is next, and here we've had a situation where we've actually gapped higher. So we're back in business, things looking rather good in the sense that we bounced above a rising 50-day line. That tends to be a continuation signal. Recent resistance towards 4,400, obviously the initial target, but actually looking for up to 4610, and that one-year resistance line projection, and looking for that by the end of next month. So the old rising trend channel there from April has now become support for this market, and that's just below the 4,000 level. But what a move we've had on gold in the recent past. Moving on to the stocks, and Very interesting at Avacta at the moment, with the shares edging up every day. I suppose the only pie in the face that one could deliver is that in such situations when Avacta has been looking very hot, there tends to be a fundraise. But at least in terms of the technicals, which don't include any fundraise potential, got a rising trend channel there from June, heading for 90 pence. We're looking for that. We're looking for that by the end of next month. Probably now looking for that by the end of this month, while we're above recent broken resistance through 74 pence. Next up is a stock which has not been quite so exciting in the recent past. It's Andrada, but just got the feeling now that this will be the final. Well, we've seen the final test for support towards 2.5 pence. You can see anyway that that's been the support for the market for much of this year. And we've got rising 200-day line as well, bear trap rebound from below that. All that's missing now probably is that the 50-day line starts to rise, but we're looking and hoping for 4.5 pence plus by the end of the year, by the end of December, after the recent RSI 50 rebound that we had, which is a continuation signal on the upside. I believe there'll be some news from Capita next month, and in the meantime, the shares looking good in terms of that rebound that we've had above a rising 50-day line. That tends to be, as I said, a continuation signal, and looking for the shares to head up to as high as £4.30 by the end of the year as a best case scenario target. Obviously, that's a punchy call, but at the moment, it's quite a punchy chart, and only the wrong side of £3 really delaying that upside scenario for the end of next month up to 4.30. I suppose maybe allowing for it to take time into January, but at the moment, 6 weeks could do it. On to E-Star, which is probably the RNS of the day, and here you can see that the shares have very obligingly hit the top of the rising trend channel. I did look at E-Star a few days ago, and it looks as though other people were buying into the shares ahead of today's announcement. The target there at 2.75 pence, and I suppose the next thing we can do is look for a fresh target, which will probably be the upper parallel of that rising trend channel from this time last year. That's heading to 4 pence, and I suppose that would make for a best case scenario target by the end of next month. Ideally, whatever happens, we stay above the recent broken October resistance and the top of the gap, or the floor of the gap there, around 2.25 pence, ahead of a potential move to 4 pence. In fact, surprising the shares aren't up even more than they have been, but I suppose they were already going up anyway. Moving on to a situation which is sort of shaping up a bit. Here we've got EnergyPathways, not a company which I've got great faith in, and you can tell by the chart that it's been a very volatile situation. But going by the technicals only, rather than any personal views, you can see that we've broken that line of resistance there from September, which is a good thing to do, 4.9 pence, and we've gapped through the 200-day moving average today, 5.25. So basically, the view at the moment is while we're above 4.9, looking for at least 7 pence again, which was that spike that we had last month for the shares. Ideally, we stay above the 50-day moving average, currently at 4.8 pence. Whatever happens, and if you look closely, I think you can see that we've actually bounced above a rising 50-day line, which, as I said in previous stocks, is a very strong continuation, a very strong bullish signal for a stock or market. Itaconix is next, and here, well, the company's quiet. The shares are at least in a range between, let's say, 102 at the moment, the floor of the channel, and hopefully up to as high as £1.40 if we can get some decent news out of the company. The only thing missing at the moment is the shares giving us an end-of-day close above the 200-day line at 117, which hopefully they will do. But as you can see, in the recent past, it's either been totally blue candles and opening at the low, closing at the high, or just flat, and that is actually a strong technical signal. So let's see if we can get up to £1.40 by the end of the year. Stock that I don't think anybody looks at apart from me is Integrated Diagnostic Holdings, and here we've actually hit the target there at the top of the channel, 63 pence above that, looking for a steeper ascent up to 90 pence by the end of the year, while we're above the top of the channel there and 63 pence. With gold up, you're sort of looking at the small miners explorers, developers to do better. And the only thing missing from the Lexington chart here really is the 200-day line rising, but we've pushed above a rising 50-day line at 4.44 pence dead. And looking for the top of the channel there from back in October 2023, as high as 6.25 pence over the next couple of months, maybe by the end of January. It's perhaps disappointing that the shares aren't actually higher, given how well, given the gold price and also the sentiment towards the sector. Mkango is next, and it's here on the basis that the shares have bounced off the floor of that rising trend channel from July. RSI has also gone back above neutral 50. And the view at the moment is while we're above the floor of the channel and the 50-day line looking at 48 pence, looking for at least a retest of late October resistance at 65 pence by the end of this month. Finishing off with WH Ireland, not really because there's not much to do now, but did actually chart this stock previously, and I was looking for 2.5 pence before the bid approach that the company's had, and you can see that without knowing anything at all, the charting worked. All that has to be said after the recent news from the company did look vulnerable to a takeover. That's it for me today. More updates tomorrow.